Order flow and liquidity is going to be the topic of this video, right? So I've had some questions about how can I combine order flow with my entry model. So I'm going to be going over an entry model using some basic ICT concepts or smart money concepts, and we're going to combine it with liquidity and order flow. So this video is going to discover those two concepts. So before we go into the charts, this is ES or the S&P 500 on the 15-minute time frame. We're going to break down the actual entry model we're going to be going over. So what I want traders to understand, if you've come from an ICT background or you've come from a background that uses fair value gaps or any kind of smart money concepts, we are going to be focusing on this price. So this is what we call the New York midnight opening price. I'm just going to abbreviate that to NYMDOP, right? New York midnight opening price. And once you have that, what we're looking for is we want to see price sweeping above this price over here. This is going to be our sweep of liquidity in this case, right? It's always going to be our manipulation. So this red circle is our manipulation, and then we're going to be focusing what we call absorption over here. So this is, again, I've made previous videos on this. This is a break and retest using liquidity and using order flow. So this is basically where we use order flow for our entry. And notice how we're going to be going over a very specific way to target, right? So I've had questions about where do I target? So if you're a trader who suffers with any kind of psychological problems, right? Let's say you're greedy, or let's say you fear price hitting your TP, right? You exit too early and you don't let your winners run. Well, here's a simple way you can fix that, right? It takes some discipline, but it takes knowledge, right? So it's strategy, knowledge before psychology, right? Psychology itself is overrated. So if this is the previous day low, I want you every day to go and draw a horizontal line like this with the previous day low, and I want you to target the previous day low when you're in a sell. And we're going to be going over this entry model as to how you can do it. So we're going to be combining the New York midnight opening price, we're going to be combining order flow with fair value gaps to understand what was going on in this region. So if we just go over to the charts now, we're going to take this into into a trader scenario, right? So order flow and liquidity is what we're going to be going over. So we're going to be going over what I call the triple X model. And so the triple X model, once again, is where you're trading from, what you're looking for, and why you're looking for it. We're going to pay very, very close attention to this second one over here. What are you looking for? So when I place a trade, right, it's very simple. You need to know where you're looking for. So this entry model over here, we're going to be coming back to this in a lot of detail, right? So let's just go over to the left-hand side and see what was going on. So when I approach a chart, so this is now Tuesday, the 22nd of July. I wasn't able to catch the short, but I just want to go over how you could have caught this short over here. So we're just going to be breaking this down. So what do I look for every single day? So we have the Asian range over here, and you want to notice how price behaves in and around the Asian range. The Asian range is my favorite session, right? Because it gives you a lot of information. So what you can see in the London session, is we see a sweep of the Asian low. It's quite an interesting sweep in the sense that we see the markets heavily moving downwards. So this is what we call our manipulation phase, right? But the true manipulation actually occurs when we see the following. So I am always looking for a 15-minute fair value gap. All of my trades come at a 15-minute fair value gap, and I'm looking for a point of interest or a POI. So this here is the POI. And so I get questions about my POI selection. How do I form a POI? This is what we're going to be going over, because this is the where. So when you're trading, you need to know where you are trading from. So this is the where. So let's just understand what makes this a key level, what makes this a POI. And the reason the where is so important is that if you're struggling with any kind of psychological problems, if you can train yourself to be disciplined to only trade at your key levels, you'll have a much higher chance of making it. The reason I say that is because you're going to take a lot less dumb trades, and you're going to take more informed trades if you know exactly where to trade from, and you can therefore build the patience, build the discipline, build the psychology to wait for price to get to that area. So what makes a key level? So we're going to be focusing on the same entry model that I discussed last time. So I want you to draw a line at 5 a.m. UK time. This is New York midnight opening price. This is the price at New York midnight. So the opening of this is 307.99 on this chart. So that's going to be around this region. So I want you to draw a line like this, right? So what does this dashed line actually mean? So if we just kind of play price on a little bit, we saw a heavy move to the downside as the market opened. So the market's opened just before this candle. So we are looking for a manipulation of this price. So when you see price coming higher like this is the manipulation I use. This is one of my manipulation models. For those who have seen some of my previous videos, you would have seen I use the Asian range. This also counts as a manipulation. So there's two types of manipulations I use. The first manipulation is what we call manipulation phase 1. So price would head higher, give a break, and then we look to enter, right, above the daily opening price. The second one is where we simply sweep the Asian low, then we sweep the Asian high, and then we have our same entry model. The third, and this is the most valid and one which I think is the most underrated, we see price taking out the midnight New York. So the price at New York midnight opening price, sorry for that. So we are looking for a POI that gives us our manipulation. So by price taking out the Asian low in the London session, this is an enticement of early buyers, right? So I'm just going to write here, early buyers. And so early buyers is the way the markets manipulate early buyers. So we can see price taking out the Asian low and giving us a reason to go short, right? Giving the market a reason to go short. Now, this phase here is the manipulation, right? So the manipulation phase itself is going to be this upwards phase. And what confirms the manipulation is the sweep of the New York midnight opening price. I'm just going to write NYMDOP, right? New York midnight opening price. So this is going to be our key level. And so when price comes into a key level, there's only two things that can happen. So this is the where, right? To sum that up, right? We're looking for a POI. So the where represents a point of interest or a POI. And so when you look at a POI, what you're looking for is a 15-minute fair value gap. You're looking for some kind of a liquidity sweep, and then you're validating everything with the order flow or the OF. I'm just going to write OF for short. So the order flow itself is what validates a key level. So now that we have that in place, let's move on to the what. So what are you looking for inside of these key levels? So let's break this down. So now that we come here onto the 5-minute chart, right, let's clear this up. What we're looking for is we're looking for some kind of an entry model in this region, right? So actually, before we go down and we look at our entry model, right, what gives me the confidence that price is going to go lower? So this is obviously a selling trade. So what gives me the confidence that price is actually going to go lower? So I want you to stop this video and ask yourself, right? The market targets only two areas, right? One of two areas, usually both. What are they? So the market will target either fair value gaps or liquidity. It's really that simple. The market will target either fair value gaps or liquidity. Now, once you have that in place, you want to understand where that liquidity is, right? Liquidity very often is previous day lows, and that is what this entry model is all about. So what happens is when you see price opening, you're going to have some kind of a manipulation. This is the New York midnight opening price. You're going to have some kind of a break and retest, and you're simply looking to target the previous day low. So the previous day low will be somewhere down here. So let me label that in red, right? So you want to be trading off of fair value gap, targeting the previous day low off some kind of a POI or a 15-minute fair value gap. So this is the entry. It's actually quite simple. You look for a manipulation, open, manipulation, break and retest. So that's going to be your break, and there's your retest to head lower. And you're targeting the previous day low. This red line is the previous day low. So in this case, it's actually the previous day low from Friday. And the reason we're using Friday's liquidity is there's a couple of reasons for that. When you're framing a trade, if you know where price is likely to head to, that gives you, or at least it gives me, more confidence in deciding whether to go long or short. Obviously, order flow is the final confirmation of that, but we are going to be breaking down why it's so important to use fair value gaps and liquidity in this entry model. So what happened is Monday swept Friday's liquidity. So this was Friday's liquidity, right? And also we left equal highs over here. So we can see Monday took out Friday's liquidity, and we see that over here. So when Monday takes out Friday's liquidity, we essentially want to be targeting Friday's liquidity to the downside, right? So we see upside liquidity swept and we see downside liquidity swept. So that was kind of the entry. So that's how we use kind of liquidity with order flow. Now, when we come on to using other things over here, what we can see is that we saw price leaving a fair value gap just over here. This was from Thursday. So again, Thursday in its own respect left a POI. So this is the other thing we want to do, right? When the markets move in any direction, the markets are always going to target either fair value gaps or liquidity. It's always one of the two things, often both. So in this case, we're looking for a simple break and retest down to here, targeting liquidity and targeting fair value gaps in line with this entry model over here. So the question now becomes, how do you know where to target? Or how do you know when to enter? So we've done the we've done the where, we've looked at the what, and now we're going to understand our why. So we're going to be understanding what was going on over here. So when price comes into a key level, there's only one of two things that can happen, right? So we're inside of a key level right now. This is the 1 minute chart on the S&P 500. So when price comes into a key level, let's kind of play price back a little bit. The price action here can either break to the upside. We can have, we can either have price breaking to the upside, or we can have price breaking to the downside. These are the only options we have. Now, truthfully, there's no entry model that's actually going to give you this confirmation, right? If you're looking for the best confirmation, it is essentially going to be order flow, right? I'm not being biased, I'm just being honest, right? So this is how we kind of trade the ES. This is the ES market, right? So we're just going to get the A-test platform up and running. We're going to be breaking this down. So while that's loading, I just want traders to understand a couple of things, right? When we look for a break and a retest, what we're looking for is we're looking for price to essentially break, come in, we have an absorption of orders before going lower. So this is how we're going to break this down. So the question really becomes what's happening here, what's happening here, and what's happening here. So we're going to be breaking down 1, 2, you need to know what's happening here as well. So that's going to be 3, and then 4. So these are the 4 simple steps to a break and retest, and I don't want to overcomplicate this. So let's see if ES is loaded. So here we have ES. This is now the 5-minute chart of ES, and we're going to bring up that same key level. So again, for those traders who are wondering what this platform is called, this is called the ATAS platform. And so the ATAS platform, very simply put, it stands for Advanced Trading Analytical Software. It is the easiest platform to use when it comes to order flow, and it's one that I really recommend traders use, right? So let's kind of break this down even further, right? So the same key level can be drawn on the ATAS platform. So there is your key level, right? So if that's your key level, notice how price went all the way down to the previous day low, and that's something we're going to discuss as well. So on the A-test platform, what are you looking for? Well, you're simply reading the order flow at key level. So let's just go to a 5-minute chart. And on the 5-minute chart, we're going to be understanding this price action over here. So if we kind of break this down, let's kind of understand what was going on. So let's look at this first initial retest, which is over here. So what we can see over here, I've made lots of videos about the A-test platform, and I want traders to understand this here in red represents aggressive sellers. So this was the first initial test into the zone, right? So these were aggressive sellers. So this represents number 1. Number 1 represents the aggressive sellers, right? So we're looking at a lot of aggressive sellers entering the zone, and we see price popping higher. So this represents this region over here. So what was going on here is we saw a lot of aggressive sellers. So I'm just going to write that down. So I'm just going to write AGG sellers, right? A lot of aggressive sellers. So these aggressive sellers obviously failed, right? So the markets moved higher. And we can see that via the 1-minute chart over here, and we can also see on the A-test platform, we can see price moving higher. So we see these aggressive sellers failing. So when aggressive sellers are failing, what that means is that there's buy limit orders in control. So what that means very simply is that buyers are in control at this moment in time. So buyers here. So these are what we call buying or buyers limit orders. Limit orders. And so what that means is that buyers are in control. So I'm just going to write that down. Buyers in control. And so if buyers are in control, you want to be buying, right? Fair enough. Now, of course, we look for price to give us a retest. And so when we look at this retest over here, what's interesting to see, I'm just going to clear the chart up a little bit. When price comes back into this level, there's only 1 or 2 things that can happen. If the market pushes higher from here, we can confirm that our buyers are in control, and we can take a long position from here. We can have a stop loss just under here, and we can take that trade. But what actually happens is we see the markets essentially breaking below. So what you can see from this movement here, especially this break below, is that these passive buyers, or these initial buyers that were in control over here, have essentially failed. So we're seeing buyers break down. Right, we're seeing buyers break down. So once again, when we use the order flow or the A-test platform, what this is showing us is that aggressive sellers are present, which means that there's basically buy limit orders over here which push price higher. So the buy limit orders were there, right? The buyers are in control. Now we saw this huge move to the downside, breaking below the level with the body, and we see that over here. So the question now becomes, these passive buyers, or these buyers that were here before, have essentially failed, right? They failed basically around here. So here's roughly where they failed. So if we just kind of draw that, we can see the failure of buyers in this region. So if buyers fail over here, what we're looking for now essentially is a retest. It's quite a fast retest, but we're going to be looking at a retest in this area. So we can see here the market essentially came up and retested with this wick, right? This wick here before we had this break to the downside. So you really want to be asking yourself, what was going on in this initial retest, right? This is what a retest basically looked like. We see price breaking, retesting, and then heading lower. So what was going on inside of this retest? So here we have the retest, and we're going to go over to the A-test platform and see what was going on. So let's break this down. So we're going to have our charts, our schematic, and then we're going to have the trusted A-test platform. So on the A-test platform, what we can see over here, quite interestingly, is we're going to be breaking this region down. So even though the candle was red, what's interesting is that we had a lot of aggressive buyers inside of the zone. We had a lot of aggressive buyers inside of the zone. How do I know there are aggressive buyers? Well, you can read the bid and the ask, or more importantly, you can just, or easier put, you can read the delta. So the delta simply represents the difference between the ask and the bid. So when you see blue delta, blue delta, blue delta, when you see a lot of this blue delta, what that means is that there's more aggressive buyers than aggressive sellers, right? And that corresponds, oh, let me just get them up. So this here corresponds to this wick over here. So this wick essentially was full of aggressive buyers, right? The candles don't actually show you that, and neither does any ICT entry model. What you need to understand is that when you see a wick rejection and price goes down, what's actually happening is that inside of that wick, there are aggressive buyers hitting the ask, trying to drive price up. Now, the fact that you see price heavily, moving to the downside, and this is essentially where your entry could have been, right? Either here or more realistically here, with a stop loss just above here. And we're going to go over our target in just a second, right? Where you could have targeted essentially the previous day low all the way down to that fair value gap from the previous week, just like this. But before we go on to our target, we want to understand why this trade was actually valid in the first place. So 32 for 78. What does that mean, right? 78 aggressive buyers and 32 aggressive sellers. If you look at the next row underneath, 70 for 146, 146 aggressive buyers and only 70 aggressive sellers, right? 142 for 101, right? Then we also see the numbers down here, a lot of blue, a lot of blue. We see more aggressive buyers and sellers, but when the market moves down, what that means is that essentially sellers are in control. There's sell limit orders being hit, and the limit orders overpower the aggressive live orders in the now. So what was going on in the now, right? In the now time frame is that you can see aggressive buyers have failed. They have been absorbed, which means that sellers are in control, right? Sell limit orders are there. Passive sellers are present. So what's important to understand when you look at it from a buying perspective, right? These passive buyers failed, and now these aggressive buyers also failed. So if these buyers failed and these buyers failed, what that means is that sellers are in control, because if the buyers are failing, you should be selling, right? It's really that simple. So if we kind of play price back a little bit, we ended up having the market essentially give us whatever it was, a 1 to 2 or 1 to 3, right? Essentially targeting the low from Friday, right? Friday's low over here. Very fast trade. If you took it, well done. I didn't catch this one myself. But this is essentially how we use liquidity to our advantage, right? So what we're doing, very simply, if I kind of bring this over to the left, we're trading from key levels. So we want to see price break below a key level, re-enter a key level, and then boom, target a previous day low. So this is going to be your previous day low. So what we're looking for essentially is this. If I draw a lower time frame entry model, right? I don't use an entry model. I rely on order flow. So we want to see price essentially breaking below and then retesting. We're looking for the failure of buyers. We're looking for the failure of buyers to drive price down. That is the essence of basically an entry model, and that's what you saw playing out just over here. But to sum up the video as a whole, when you're looking for a trade, right, you want to see price opening, and you're looking for some kind of a manipulation. So this is the Asian session over here. What we focused on today was the New York manipulation. So this is basically what was going on. So we have Asia. This is the Asian session. I'm going to label this in orange. So if this is the Asian session, the New York midnight opening price is going to be somewhere over here. So this is the New York midnight opening price, and this is a subtle manipulation I want traders to understand. When you see a subtle manipulation like this, this is a manipulation model, right? You want to see price sweeping above the New York midnight opening price. And once you have that, you can enter using basically any entry model. So this is essentially, really, when you break it down, it's a break and a retest. And where do you target? The previous day low. Boom. So that is exactly what you see just over here, right? You wait for price to break, retest, target the previous day low. And so that is one of my favorite entry models, combining both order flow and liquidity.